there's not that much controversy around that or negative publicity, right? So somewhat of a low-hanging fruit, right? And it's been working. They're getting more taxes collected, more returns filed, that kind of thing. So increasing that is definitely a pretty big part of the plan and represents an opportunity for tax professionals that are on this webinar today, and for should last for the foreseeable future. It's also some of the stuff in the plan is. And I know some people, as I go through these things, are like, yeah, right. When that happens, like, let me know. And that kind of, different things that we say sometimes as tax professionals to be a little bit skeptical, right? But the non-filers outreach and communication is already well underway. It's like one of the early priorities that's already happening, and as well as one of the best opportunities for tax professionals to help clients and to increase our own earning power and potential. So this one, I think, is pretty underestimated, most likely, but also, I mean, gosh, talk about a huge project, right? Redoing the entire IT infrastructure of the IRS is what's on the table, and not only on the table, but is planned, and including, really like. If you've dealt with the IRS a lot, there's the issue of like the siloing of information and systems not connecting and things like that. So kind of having one, almost like a CRM for all the taxpayers, right? And unifying all these different legacy systems is what is being described in the plan. So really talk about a big contract for IT company or IT companies. And really a big part of the plan is updating and modernizing the computer systems. What they've shown and what they argue for in the plan is that any investment in the IT infrastructure, it pays off in the sense that you get more money back from tax collection than you spend on the computers, right, and on the software. So there's a belief that it's a positive ROI. There is kind of like I thought it was interesting, at least a sort of a before and after, like envisioning of, after we put all this money and time and effort into the, updating the IT infrastructure, what will this look like? And so employees will have the systems, technology, and access to data, and the taxpayers will have the tools they need to self-service the online services. And really the tax pro accounts and the other, which we'll get into in a second here, the other sort of online portal offering for us as tax pros, it kind of fits into this, right? We're being able to self-service online, similar to how you would with your bank or with any other type of modern corporation. So where are the new computers going to focus? That's definitely a big question that people have, right? There, a lot of concerns that the sort of promise to not increase audits on people making under 400,000 may or may not turn out to be accurate, that kind of thing. This is where they're saying that they're going to focus. This is in the plan, right? Is better identify tax non-compliance among high income, high wealth taxpayers and partnerships. So those are kind of major focus areas in case you work in one of those areas. It's definitely being spelled out that, hey, these are, major areas of enforcement that we are looking at. A lot of jobs available. And I mentioned, as we were getting started here, we have trouble across our industry, right? With hiring right now. It's actually one of the main things that our members have been asking us for is, how to hire, how to train, just how to find people that really want a career opportunity that you're offering, whatever it might be. And the IRS is actually having similar challenges. One of the things that I was interested to hear from Carlos that he mentioned in our prep for this session is that the IRS is actually having trouble filling these jobs. So if you look on the job site, for example, they've got 24 pages of open jobs, as of now. So a lot of hiring, and in terms of what that hiring looks like. So if you are dealing with the IRS, obviously that's going to impact us, right? Because that's going to be a person on the other end of that interaction. And, and the number of data scientists in particular really stands out in terms of like what the hiring needs are. And data scientists, meaning that the IRS is obviously getting a massive amount of data, through tax returns, at risk of stating the obvious, right? But they also have the ability to access data through a lot of other third parties, right? So how to use AI, how to use advanced technology to sort of make the most of that data is a big part of the modernization job that the IRS is tackling. Interestingly, it's not all W-2 full-time employees that they're looking for. It's part-time employees as well, independent contractors, even temp workers, interns. So pretty much every type of hiring that you can imagine. So the current workforce of the IRS, 63% will be eligible for retirement in the next 6 years. And so that's a pretty high percentage, right? Doesn't mean that all of those people will retire. It'll be probably interesting to see, what percentage of that 63%, do retire. But it's definitely a new generation that would be coming in under this plan. And that would obviously bring changes for us as tax professionals. And we can expect to see the IRS at job fairs, at all the places where companies go to try to hire people. And here's a few of the initiatives that they have in that area of recruiting, and talent development and that kind of thing. And these are the plans and the timelines, and you can see that it's right now. That this is a priority for them to try to hire people, and especially specific people with tech skills, and that can really help with this modernization investment that they're making. This was interesting that they were setting up an IRS university. So for training and to be able to train up all the existing agents as well as all the new agents. A lot of you guys already know that they hired several thousand customer service reps. And, we were pretty grateful for that, to be able to start getting through to people on the phone and having clients be able to get through to people on the phone. And then just training those agents and how to use all the new systems, it's a pretty big deal to, it's a pretty tough job, right? So as much as sometimes we might complain about the IRS, certainly being able to deal with and work with well-trained customer service reps and agents would be a plus, I think, in a current environment. The IRS makes a point in the plan to definitely envision tax professionals as partners in the plan, as mentioned, several times out throughout the plan. And I think there's a realization, right, that tax professionals really did a lot to support the IRS in a lot of ways during the pandemic situation, when they had to shut down a lot of or they chose to shut down, or however you want to portray it, a lot of their customer support resources. We took on, as tax professionals, right? We took on a lot of that work, with helping with the PPP rollout and with the EIDL and every other type of thing that, we're trying to block out of our memories at this point. But I think there's an understanding that tax professionals are an important part of the overall, system, and that we're really needed by clients. So there's sort of it's a desire that is apparent within the plan that they want to bring tax professionals, that they want to have support from tax professionals during this process, right? In terms of, I think it's a really pretty natural question to say, how's the $80 billion going to be spent? That's probably one of the main questions that people have. This plan actually does go into that in terms of showing how it's going to be spent, or how, and this is proposed, right? So this is not reality. This is proposal world. And you can see here the objective on the left-hand side, and then the total proposed investment on the right-hand side, right? So, the focus expanded enforcement is definitely a much larger percentage, right, of the funding than every other one, right? And then 12% for the computers and the IT stuff. So, it remains to be seen if the focus groups that they have identified, right? So like high income, wealthy individuals, partnerships. I think it remains to be seen whether the tax collection will pay off, so to speak, if they really do focus on that, right? Like, are they really going to be able to collect the amount that they think they are from those groups, considering the level of professional representation, and just the unknown of, they think they kind of know how much tax is being avoided in the upper echelons of the income scale, but I don't think that, or I know that it's not really known, because a lot of those business structures are a bit mysterious, right? Sometimes intentionally so. So how much of this 47% will go specifically towards the groups that they have identified versus more broad enforcement is it really remains to be seen as we go through the execution of these plans. There is an urgent request from the IRS in the plan to not think, hey, you're giving us this new 80 billion, so now you can just cut our annual budget by a similar amount, right? Because we got all this money through the Inflation Reduction Act. They really want to make it a point that, we need to keep the steady state regular budget at the same, or, inflation adjusted, even going up a little bit.
Thanks for watching. If you found this session helpful, we invite you to join our Pronto Tax School memberships. You'll get access to weekly live mentor support sessions like this one, plus tons of advanced tax course trainings, private groups, special discounts to in-person events, a tax business growth coach, and so much more. Check the links in the description to learn more about our Dream Team and Forever Edition memberships, and join us today.